Hey everyone, welcome back to Corporate Decoder. Today, CALIDI Biotherapeutics Incorporated just filed an 8K reporting a material definitive agreement and unregistered sales of equity securities, and I am seeing a move that could signal bigger things ahead. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just issued a warrant for a significant amount of stock, and it comes with some interesting conditions that could heavily influence its future. Alright, let's dive into this filing from CALIDI Biotherapeutics Incorporated. This is a current report filed on what is called a Form 8. Think of it as a way for companies to quickly announce important news that shareholders would find material. CALIDI Biotherapeutics Incorporated, or CALIDI on the stock market, is a company working in the biotechnology space. We've seen some headlines about their precision genetic medicine platform and FDA fast-track designations for their cancer treatments, so they are definitely in a developing field. They've also had some previous stock offerings, like a $6 million one back in August of 2025. Now, the big news here concerns their common stock. This is the basic ownership unit of the company. The filing primarily discusses two key items. The first is about entering into a significant agreement, and the second is about selling equity securities that were not registered with the CC. This usually means they are being sold directly to a select group of investors, often under specific exemptions from standard registration rules. Here is the core of the story. On May 6, 2026, CALIDI issued a warrant. A warrant is basically a right but not an obligation to buy a company stock at a set price. In this case, it's a warrant to buy up to a whopping 17,391,304 shares of their common stock. And get this, these shares are currently unvested, meaning they aren't fully owned by the warrant holder yet, and the purchase price is set at a very low 23 cents per share. This was done through a private placement with an accredited investor. An accredited investor is basically someone that the SEC considers financially sophisticated enough to handle the risks of private placements without the full protections of public registration. This warrant isn't immediately available to be exercised. The earliest it can be used is September 8th, 2026, and it is tied to some specific conditions that need to be met before those shares become truly theirs. Here is where it gets really interesting and ties into those vesting conditions. Before July 8th, 2026, the investor holding this warrant has the option to buy up to an additional $4 million worth of common stock, but this time the company will register those shares. The warrant actually vests, meaning more shares become available to buy under the warrant, in proportion to how much of this registered stock is actually purchased. So this isn't just a simple buy-in, it is tied to future registered offerings, and importantly, neither side is obligated to do these deals. It's a way to incentivize future investment and provides a potential path for the company to raise more capital, while also unlocking more potential shares for the warrant holder. The company is structuring this deal under specific rules like Section 4, at 2 and Rule 506B, which are exemptions from the usual requirements to register securities. With the CC, this is common for private placements to accredited investors. It relies on the investor providing assurances that they meet the accredited investor criteria. Crucially, whatever shares are eventually issued via this warrant cannot be resolved publicly unless the company registers them or there is another exemption. This is standard practice to keep these private placements private, at least initially. The full details of this warrant agreement are available as an exhibit. Exhibit 4.1. This is where you'd find all the nitty-gritty legal terms and conditions. And as is standard for these filings, there is also an interactive data file, which helps with electronic processing and analysis of the report's information. The report is signed off by Andrew Jackson, the Chief Financial Officer, dated May 8, 2026. This shows that company management has reviewed and approved the contents of this filing. Now, looking at this transaction, it signals a few things. For one, the company is raising capital, or at least setting the stage to raise capital through a private investor. The low exercise price of 23 cents is notable, especially considering the stock has traded significantly higher in the past. The fact that vesting is tied to future registered offerings suggests the company might be planning more public sales of stock soon. This could be a way to bring in funds for ongoing research and development, which is vital for a biotech company. However, it also represents potential dilution. If all these warrant shares are eventually issued and exercised, it could increase the total number of shares outstanding, potentially lowering the value of existing shares if the company's market value doesn't grow proportionally. This happened with companies like Sears, which went through multiple dilutive stock issuances that weighed on its share price over time. For CALIDI, the key will be whether they can use this capital effectively to advance their promising pipeline and generate revenue. What I am watching closely is how these registered offerings unfold, and if the company can meet its development milestones. The initial 17.3 million unvested shares coupled with the potential $4 million registered offering means a substantial number of new shares could come into play. This warrants careful monitoring to understand the full impact on shareholder value. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this deep dive useful, please like this video and subscribe for more. Check out the Discord linked in the description.